Hey guys, welcome back to the channel. One of the things that a lot of people talk about is, how to make money, how to save money. But what does that really look like? Like, what is the road from 0 to 1 million or 100 to 1 million? That's what we're going to talk about, right? So, chances are, you're too focused on singular financial problems, right? Like paying off debt or picking stocks, right? Like, you might be. Well, the most successful people, they're going to take a big picture approach to their money, right? We're going to talk about how you can do that too, right? We're going to talk about, 5 things that you can do, 5 steps, that we can do, right? Proper financial planning takes into account the whole picture, not just a piece. Saving for retirement might be your current goal, but if you don't have a plan for emergencies, that goal can get derailed in a second and kill any dreams of sipping margaritas on the beach, right? So, this is where we're going to get into this, right? And as you work your finances, think of building your wealth, say like a pyramid, right? A good financial plan builds upon a solid foundation and enables you to reach your goals even in the face of life's uncertainties. So, the first thing is going to be cash flow, right? In order to develop a comprehensive financial plan, you need to start with the most basic of needs, cash flow. If your income does not exceed your expenses, it's impossible to save for the future. It seems like a no brainer, but this can be the most difficult part of the planning process. Even millionaires need to reassess cash flow from time to time. Ensuring positive cash flow means working with a budget, trimming expenses, maybe increasing your income. It can be hard work, but it's critical. It forms the base of the financial, pyramid that we're going to be building, which everything else is built on top of. So, an honest assessment of what you spend each month, it's going to be pretty vital, right? Especially since you want to try and do quarterly financial checkups, right? In order to do, an accurate picture of how much you can invest. Even something as simple as $50 a month can amount to quite a bit. Once you're settled into a good balance of paying bills and investing, you want to protect what you've built. The first defense you'll want to set in place is an emergency savings account. This should be a savings account apart from your regular bank to which you transfer a few dollars every week or month for years. How much is enough though? Well, some financial advisors suggest saving between 3 to 6 months worth of expenses, but you can use your own judgment. If you're self employed or have a variable income, you may want to consider saving more than 6 months. Okay, well, that's going to move us to number 2, risk management. The other part of the protection piece is managing risk. Insurance is hardly the most exciting part of planning, but it's essential that you have the proper safety net in place to catch you in the event of an unforeseen catastrophe. So important, in fact, it's going to be our second level in this pyramid, right? Health insurance, auto insurance, homeowners insurance, they all serve to protect you from facing catastrophic out of pocket expenses in the event of a loss. Life insurance should be set up to replace income for enough time that a surviving spouse can make arrangements so he or she's not going to be forced to sell your house or claim bankruptcy. Another consideration to keep in mind is the fact that more people end up disabled than dead, right? It may be worth your while to check into long term disability policies, right? So that's going to move us into the third one, investing. We should all save for retirement, but if you're savvy, you'll also invest money for other goals, right? Buying a car, buying a home, funding your kids' college expenses, right? You want to keep these savings goals independent from your retirement goals. An online investing account is the perfect way to begin setting aside money for these life goals. Paying off debt is essentially an investment as well. Rather than accumulating interest bearing assets, you're eliminating interest charging liabilities. Prioritizing debt repayments, and investing for other goals is one of the most nuanced and personal finance decisions you'll have to make. That said, the important thing is to remember that any investment or debt payment increases your net worth. So doing something is better than doing nothing. Now, a little thing that I would say is most of the debts you want to pay off are going to be your high interest debts. Those are the ones you really want to get rid of first. So don't try to pay off like a low interest debt versus paying off like a high interest credit card. Always pay those high interest debts first, right? Retirement planning it's usually the sole focus for most people, right? But you can already see how it's just one part of a bigger puzzle. Investing for retirement should take into account your 401k, your 403b, IRA, any other retirement package that you might have available. You could probably consult some of these online calculators, to do it yourself and determine what you need to put into a retirement account in order to reach, whatever your specific goal might be. So, a good rule of thumb is that you need to save 25 times your desired retirement income. This assumes a 4% annual withdrawal rate. So, as an example, if you want to withdraw, say, 50,000 a year in retirement, you'll need to save 1.25 million. Now, keep in mind also that inflation means 50,000 will not go nearly as far in 30 years as it does today. So the more you save, the better. I know quite a few people who, when they're looking to save, they do this same calculation, but then double it. Right? They're like, oh, so instead of 25 times your desired, right, it's 50 times, right? And some people are like, oh, if inflation is averaging 2.5%, I need to triple it, right? There's a bunch of different ways that people get to this calculation and get to whatever number they think that they need. But, you'll be able to figure out what's right for you, right? And if you're not sure, consulting someone is probably going to be, your best option. So number 4 is going to be tax planning. Tax planning goes hand in hand with retirement savings, as well as considering the tax advantages of a 401k and IRAs. But depending on your income level, you may want to make a plan for other investments as well. Some type of investments being, municipal bonds allow you to avoid paying taxes on your gains. Once you accumulate a 5-figure portfolio in retirement investments, consulting a tax advisor is probably going to be a good idea. Last but not least, which I know a lot of people don't do this one, is estate planning. Right at the very top, we're estate planning. Although it's not something most people need to worry about until you get closer to retirement, you should at least familiarize yourself with how it works. This stage involves how you want your assets passed on to heirs or given to charity. Trust can be used to carry out your plans much more, efficiently than probate. Your state's legal process for executing your estate in the absence of an estate plan, right? At a minimum, everyone's estate plan should include a will that spells out basic wishes and bequests. Should you also own your own business, a proper plan for succession should also be set in place, just in case, right? So, we talked about the 5 different things, right? Estate planning, tax planning, investing, risk management, right? And then, of course, cash flow. I would say most people are somewhere probably still stuck on one, right? But you got to start somewhere and you got to get going, right? So I hope you guys got some good information out of this video. Maybe you learned a couple things. If you did, go ahead and subscribe to the channel. Hit that thumbs up button. And it's all see you guys in the next video. Y'all be safe.